on board our chartists and figure out what is their strategy now after the carnage that played out yesterday and followed by, what happened on Monday. Kunal, hi, morning. Does it seem like there's any respite in store for us today?
Yeah, some respite could be at store for the indices, but then again, I think this could just be more of a relief rally for the index till the time the VIX doesn't settle down and the volatility doesn't fall down for the index. Also, we have to see which kind of sector patterns which you are looking out for, whether we are looking out for the same sector patterns like autos doing pretty well, private sector banking stocks maybe trying to be a lot more stronger as well as outperformer, whether you see the the FMCG and the pharma stocks maybe trying to add more positivity to the sectoral contribution. So I think we'll need to see those patterns emerging. And I think since the event is out of the way, I think the next set of patterns could be a lot more stronger because they could be more durable if it's led by lot many large cap names. So I think the next set of trends could be very important. Now in terms of resistances, now since the Nifty yesterday managed to fall sharply and of course below the 50-day moving average, the first port of call is the 50 DMA acting as a resistance that on spot levels is around 22,350, 400 for the index. So which means on the way up, we could be looking at the first major hurdle at 22,350 to 400 for the index.
Okay, let's connect with Shilpa Raut as well, who's joining in. Shilpa, morning. Given the carnage that played out in trade yesterday, the massive market cap erosion that we witnessed, do you expect that trade is going to be a little bit range bound for now? What are you penciling in?
Good morning, everyone. First, if we talk about FIS data, as of Friday's session closing, we saw that the net longs were at 13%, and on Monday, we saw the closing was at 28%. But however, as of yesterday, they're back at 13%, which means that the room that, the net longs can go as low as to 8%, the previous, very, very drastic lows, which we can see that, they can squeeze to in net longs to as low as 8%. But however, GIFT Nifty today indicating 100 and 150 points up is just just a pullback rally because we see that the Nifty overall PCR is at 0.73. And we have seen that, whenever the overall PCR drops to around 0.7, we see some sort of turnaround movement happening. But given the circumstances, why this market has fallen, I don't see that the rally could be very substantial. If you look at the option chain, you see that 22,500 is acting as a very crucial resistance, with 21,000 at, as a major support. So I think on a broader basis, this is going to be a range for a while now. Until and unless we breach above 22,500, we cannot talk about any substantial upside from here. But once we breach below 21,000, definitely we will test 20,300, and below that you can also see 18,800 coming. Of course, that's a very, very sharp correction that we are talking about. But for now, looking at the scenario, I believe staying cautious is something that should be done.